Hi, welcome to the Market Alert for Friday, the 30th, last day of June. So, blimey, I don't know where the time goes. So yeah, 30th of June, Friday, and an interesting day yesterday, which we'll come to in just a moment. But let's have a look at, start off with the pound for yesterday. This is the market live, as it was yesterday. The pound trading sideways at the moment. Market looking at that 130 area, which I spoke about yesterday as a resistance area. See the market hitting it yesterday morning, mid-morning, and then coming back and trading sideways. And that was really the picture of the day for the pound range bound there. But just hitting that 130 resistance during yesterday's session. Just have a quick look at the bigger picture of the pound in the daily. This is the current picture. We look inside of the overnight market and we can see that the market, there was the attempt yesterday at the 130, and on the overnight as well the market came back. It doesn't breach the 20 bar moving average and then manages to sneak through, and now is moving to the upside. So watch this area here. This is going to be crucial. Prices coming back down and testing this area. The US dollar is made a 7-month low yesterday as well. News wise today, what have we got? We've got final GDP for the UK. That's going to be out at 9:30. Medium impact news item there. The current account deficit is forecast to show an increase as well, and core CPI for the Eurozone at 10. Anything for this afternoon that's is of any note for the Dow? No, everything's out apart from we've got the revised consumer sentiment medium impact, which is forecast to come out exactly the same as well. So speaking of the Dow, let's just forward through and we'll see this switch to the Dow. As nothing was happening on the pound, I moved over to the Dow a bit early just to see what was going on. Then I came back and had a look at the pound, obviously. So let's just fast forward to the start of the Dow. Something very interesting here. Now, yesterday I spent a lot of time boring you with the details of where there was resistance in the pound, and you can see here it was at 21,483. Now let's go back to the live chart of the Dow, and as you'll see here, the market headed towards the 21,500, but at this point here, this is the 76% retracement that was in the daily chart. This is 21,480 to be precise, and the market moved lower. No surprise there. And again, I'm just going to remind you of this. I'm going to spend quite a bit of time over the next few days of why this is important. So back in the daily, as I said yesterday, this is a resistance area for this market. It is a natural resistance area. Fibonacci's are these natural mathematical areas of resistance, and the market found this to be the case. It moved lower, and as I say, if you're looking at these in the bigger picture, then you can use these to predict where the market's likely to go, and also more importantly that it is actually struggling to move higher. And then in conjunction with the lows in the implied volatility, and with something else that I mentioned earlier on in the week, you can get a snap move to the downside, and this is precisely what we saw yesterday. The market came back, it put in a buy signal. The buy was just filled here, only just hit it, and then it went on to make a 36-point loss as the market came back to that important level, 21,400. How important is this level been? And again, you can see the market coming off and bringing it back above this support area, not so much resistance. So the market finding support at this area once more. So what we were looking for, if the market was going to move lower, is a convincing break below this line. So the market didn't want to go up. There's the first clue, and comes back and stops us out. Also Notice that the moving average line is red as well. The market comes up, uses this as resistance, and again you can see that here at that 21,480 level, 483 being the 76%. The market then hits the amazing, this 21,400 level, hits it and bounces off, much to my irritation, but then we get a sell signal, and the market is actually, what's good about this is the market's got to go below the major support area to actually fill the trade. But then when it came back off the lows, I thought we were going to see it bounce back above for another 34-point loser, but keeping in mind that we've got this resistance here in the bigger picture, there's a chance the market could move lower, and also the lows in the implied volatility. So the market drives through, and at this point you'll see I switched because I wanted to see if the market, well, I say switched, I removed the stop loss, moved the stop to break even, just to see if it would actually get down to the 21,350 level, because we've broken the 4,000 level, sorry, 4,400 level, which is a major support. I know I've been barking on about this one all week. So the market breaks it, and then we see prices move lower. Now at this point, these types of price bars, again, very high volume, market coming off the lows, likely to find support. So let's see if it comes back to the scalp market. It doesn't, which I'm really surprised by, and again another indication that we've got potential to move lower, because when you come off the lows like this and prices rise and the volume's very high, it's generally indicative of a market that is going to come back. Prices try to come back. I've moved the stop down, trade sideways, starts to move lower again, and then we see the same thing again here. You know, the market goes through, and once again we've got this situation of an increase in volume, the market coming off the lows, and we're at the 300 psychological level there. So the market finding support again. I move the stop, and it's taken out there for 64 points, but then a bit too hasty, because the market then continued lower. Not too much of a concern, because even though the market moved lower, and again we're seeing this same thing here, the market increase in volume coming off the lows, we're now at the 200 level, and we'll see the market starting to find support. And I'm just playing around with some fib retracements here. I'm just trying to see if I could make these automatic to find more buying opportunities. Having a look at the daily chart here to see where we are in the big scheme of things, and you can see that the lines that we marked up yesterday, the market had gone through. We've got support at this level, and then back to the chart. So now it's evening, they don't want the market down, they want to bring it back. We've got the usual plunge protection team scenario, and you'll see them bring in the market back. What a surprise. We get a buy signal. We know the selling's disappeared, because we can see that there is a reduction in volume. This is the first bar that increases with the market moving higher, and then you'll see the market go on to the scalp, and then it's time to call it a day, as the market has achieved the objective. They plunge to the downside, and then they bring the market back through the Federal Reserve trading desk, because they don't want the market down. Now let's have a look at the implied volatility. A very interesting picture here too. So on the implied volatility, yesterday, I haven't actually put this in. Let me just do this. Let me just move this one out of the way, and then get to the end of this, and then add a data label so you can see. So yesterday we had a new high, and a paltry new high as well. We've gone from a situation of insanity, frankly, to ludicrousness. I mean, we've got 872 here. The market drops 200 points more or less off the highs, and we end up with a small move of 898. So what's going on? Well, it's quite easy. They don't see any risk to the downside just yet, which is why, of course, because the market was brought off the lows. Now, this may have been higher mid-session, but certainly at the end of the session, the implied volatility was showing 8.98, just under 9, and then the 9 that we had here, we saw what happened after. So let's just go back to the daily chart of the Dow for a minute, and here you will see what we've seen in the intraday chart at all of those support levels, that we have massive volume for yesterday and the market coming off the lows. I'm just going to remove all of these for a second just to make things a bit clearer. There's the 21,438 that we spoke about yesterday. Also, there's something else important here. Apart from the markets coming off the lows, the average hasn't been broken either. This remains green. Now, on the face of this, we are starting to see that this is a classic case of buying the market back again. So how far, if the market is to move higher and doesn't have any weakness coming later this morning, which it quite easily could, at the moment we've got a situation from this high to this low, and we're going to see, I'm going to remove the one at 483, we have a new upside resistance. Should this market reverse and move back to the upside, we've got 21,456, where there could be some resistance as the market comes up and then do this. We're certainly in a sideways range, there's no doubts about that. You can see that we've got a sideways range here at the moment. This is a classic market that doesn't know obviously what to do. It's doing its best to stay on the highs as a churning effect. You've also got the resistance back at the right tool for the job. We've also got resistance at the 504 and then the all-time high at 539. So looking at the bigger picture, there's the potential for this market to move back to the upside. That's what the market's doing on the overnight. We've definitely seen a buyback here, whether it's the plunge protection team, the Fed's trading desk, or someone's buying the value, who knows. But a very interesting picture there. Now, should prices not find any support, then we are certainly looking at the lows being taken out. And again, all I do is just draw all of these lows as the market's left behind as it's risen, and then just drag them across to actually show where there is support. I tend to do that live as the market moves lower. But that is the two scenarios that we've got at the moment. So I'm just going to save that. Also notice the market came back to this low as well, and you can see how it's just starting to move up from there. Right, just a quick look at some headlines. There's some fascinating ones being made yesterday, so let's have a quick look at this before we conclude. I know I've run over a lot this morning, but it's worth just seeing what's going on. Here we've got a situation which is alarming. Global debt hits a record high of 217 trillion, 327 of GDP globally. And again, this is always in the back, and again the manipulation of the stock markets bring it back, so people are distracted from what's really going on behind the scenes. Here's another beauty. This is why Carney was printing, this is in the US, but Carney was printing 11 billion the other day to cover bad loans, and that's in the auto industry, in the car industry. And the lunacy of the subprime markets now is in the auto loans in the US, as they call it. Auto bubble dealer literally offers a low credit score discount. So if you've got a bad credit rating, they're actually going to give you a discount on it. So the lunacy has started. Again, spoken about this in the last few weeks. Treasury will run out of cash in mid-October. CBO warns that could be very interesting, because the autumn is generally a time when you get big corrections in the market or crashes. We've also got a counter argument to what Yellen said on Wednesday. Yes, Miss Yellen, there will be another financial crisis, and there's no doubts about that. What she's saying is utter nonsense, but that's just typical. It's cognitive dissonance, I think is what they call it. Funny enough, and here's the final word. One trader warns Yellen's delusional statement means we're in a lot of trouble. As the famous quote goes, don't believe anything until it's officially denied. So again, that ties in exactly with this. Right, that's it for today. Apologies it for being a longer one, but there's a lot of information to get across, and also give you the background of what's going on and how to actually see it to pan out, and also use the information to your own benefit there. Right, that's it. Thanks for watching. Have a great weekend. See you in the next one.